Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And there's some outperformance that we're seeing from the midcaps today. 0.6% higher. Bank Nifty is giving it some company. Nifty underperforming, but it has recovered from the day's low.
Good afternoon, Sonal. Absolutely right. It's all about earnings. It's a barrage of earnings that we've seen hitting our screens, especially in the last half hour or so. But we have a lot lined up on the show, an important corporate conversation as well. Let's start off with the top headlines. Volatile trade on the street with mid-caps outperforming realty PSU banks and pharma lead gains, while FMCG, consumer durables and IT lag.
Dredging Corp hits the upper circuit after announcing capex for modernization. The company also entered into 22 MOUs with 16 organizations.
Q2 numbers boost LG Balakrishnan. The company reports a healthy set of numbers, margins back above 17% levels. The management tells CNBC-TV18 that they are sticking to their revenue and margin guidance given earlier for FY26.
Profit booking in Patanjali Foods after good Q2 numbers. Management tells CNBC-TV18 that they will see additional 300 to 400 basis points growth in FMCG revenue due to GST reduction, and FMCG biz margins should improve.
JK Cement under pressure after Q2 results missed street expectations. Consolidated volume growth at 13% continues to impress.
All right, those are the top headlines that we are tracking for you. The Nifty up 32 points, mid-caps outperforming, and banking names in focus as well. But as we've been talking about a barrage of earnings which are hitting the exchanges, this is our segment Mid-Cap Movers. Let's talk about some buzzing stocks on our radar. Sudarshan is here to take us through that. Sudarshan?
So today is the one segment which has been outperforming the large caps, and let's take a look at the companies or stocks which are outperforming or reacting to the numbers. On top of the list is Bank of Baroda. Like all the PSU banks, this also has reported earnings which were all round beat, and on the back of that you are seeing a big move. Stock is up almost 5%. Phoenix Mills, very strong internals for Q2 FY26, and that stock also has seen a sharp recovery from days low. At one point it was in the red, and currently it's up almost 4%. Godrej Consumer, like all the other FMCG names, this company has reported numbers. Those numbers look largely in line in a tough environment. That's the reason you are seeing a big move in the stock, up more than 4%. Patanjali Foods seeing profit booking. It was a good set of numbers for Q2, but still down more than 4%. LG Balakrishnan, strong numbers. Company maintained the guidance for FY26, saying that revenue will grow in the range of 12 to 14%. Also on the margin front, it has maintained the guidance, and that's the reason up more than 14%. Some of the other mid-cap movers or mid-cap gainers, HFCL up more than 4%. There are certain talks about that company is looking to raise funds. On the back of that, it's up more than 4%. Navin Fluorine has extended Friday's gains. On Friday, it was up 15%. Today also, with healthy volumes, it's up almost 5%. BSC, again, today also it's up almost 3%. And remember, on Friday, there were certain reports regarding FNO, and today also the stock has moved more than 2%. Wockhardt, there are certain reports about approval for WCK, and on the back of that also, ahead of earnings, the stock is higher, up more than 8%. Kolte Patil, following the big gains that all the other real estate names are seeing, this stock also is up more than 4%. Some of the stocks which are under pressure, first, on the top of the list is Sharda Crop. After Friday's down move, today also the stock is down because Q2 earnings were below expectations. Netweb also is down almost 6%. Late revenues has been under pressure for the last few sessions. Today also it's up almost down almost 5%. Info Edge, because it has reported October job index, and that saw a downtick, and because of that this stock also is under pressure, down almost 2%.
Thank you so much, Sudarshan. It's a neat and comprehensive wrap of all of the movers as far as the broader end of the markets are concerned. Well, Ruchit Jain from Motilal Oswal Services now joins us. Ruchit, how are markets looking at current levels? Nifty at this point, do you see consolidation or do you see further upside?
Yeah, hi, very good afternoon. Well, there's no doubt about the broader trend. We are in an uptrend now post the recent bottom formation, and the Nifty has been forming that high top, high bottom structure. And in technical analysis, we always say that when your trend is positive, use dips as a buying opportunity. Last 3 trading sessions, Nifty has seen some pullback from the highs. Now, 20-day exponential moving average is around 25,600, which has not yet been breached. So I think since the overall trend remains positive, this small correction of last 3 days offers a good buying opportunity. So and clearly, there's no stock-specific momentum in the broader markets can be seen that a lot of buying interest is there. So on the index front, also 25,600 is the immediate support of 20-day MA that we are watching out for. Until that remains intact, we think that one should use this dip as a good buying opportunity.
Okay, and what about individual tech picks, Ruchit?
So a couple of sectors which are showing a relative outperformance. One is real estate space and other is the banking. So from the realty, we like Prestige Estate, where the overall trend is quite positive. Even in recently, when the entire sector was going through a consolidation, we had seen a good relative outperformance over there. So with a stop loss below 1730, traders can go long on Prestige for potential near-term targets around 1940. And within the banking space, IDFC First Bank is where we are recommending to create fresh longs. Well, the entire mid-sized private sector banks is showing a good relative outperformance within it, which IDFC First Bank has seen price up move supported by very high volumes. So short-term traders can still go long at current levels with stop loss below 77 for potential targets of 91.
Okay, thank you so much, Richard, for joining us, giving us a view on the markets as well as your technical trading picks. Well, moving on, here's a quick note for our viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. You're still tuned in to Mid-Cap Radar. Affle reported a stable set of Q2 earnings despite the impact of regulatory ban on real money gaming in India. To put it in context, 2% of Affle's revenue historically came in from real money gaming. To discuss the quarter gone by and to understand how the company will offset the impact of the gaming ban, we're now joined by Kapil Mohan Bhutani, who is the Chief Financial and Operations Officer at the company. He's joining us now to discuss this and a lot more. Thank you so much for joining us, Mr. Bhutani. Barring the 2% impact that you had because of RMG, the numbers look decent. We've seen this time around 19.1% growth on a YOY basis. Are you expecting that impact to continue in Q3 as well? What led to the 19% growth that we saw this time?
First of all, thank you for inviting us on your show. We have been resilient on our growth side. We posted around 19.1% growth on our revenues despite the effect of RMG. But this was helped by the early onset of the festive season in the month of September itself. And we believe that we'll be able to offset the RMG effect in one to 2 quarters more. We'll be able to offset the deficit caused by the RMG.
Understood that. Mr. Bhutani, the other question what we want to ask you is, especially when it comes to the developed market, earlier, the growth rate over there was in the 20% range or slightly above that. But in the quarter gone by, it slipped down and it's now below around the 17-18% mark. Is that the new normal or can we expect growth to revert back to the 20% levels?
We don't believe it's a new normal. We are gunning for 20% growth over a medium term. However, the atmosphere or the consumer sentiment is being watched carefully. It's not about the customers are not wanting to spend. It's the consumer behavior and inflation expectation, which is leading to wait and watch for release of higher budgets.
So you're seeing that impact on ad spends as well by clients?
So basically, the budgets are in the, moved from Q2 to Q3 festive season, which starts with the Thanksgiving there. Okay. So we expect we should be able to recover from there. However, the 20% goal for the developed market is on the medium term.
over the medium term. So FY26, can you quantify a guidance for us, both emerging markets as well as developed markets, and especially EBITDA margins, the combined EBITDA margins, what can we expect?
So as stated in previously at the start of the year also, we are saying that we are gunning for about 20% growth overall, broad-based in all markets, whether it is emerging markets, India, or the developed markets on a broad-based basis. We believe that we should be in the range close to 20% plus minus some basis point. We should be there in the range of 20%.
Okay. You have 4 segments. There is commerce, edtech and entertainment, fintech, FMCG, gaming, health tech and hospitality. Amongst the 4, what was the breakup in terms of growth in the first half, and what do you expect for the full year?
So we are believing that the fintech was a little slower to start with in the developed markets. It's picking it up, and I think so the other verticals are doing as nicely as they were supposed to do as per plan. Whether it is e-commerce, whether it is entertainment, both have been providing a good support to us, including entertainment, including gaming for us.
Okay. Mr. Bhutani, the other question and something that you just alluded to, you mentioned that there is now an early sign of a recovery as far as domestic ad environment is concerned. Q2, was that halted? Was there a wait and watch mode, especially with the upcoming GST reforms? Q3, what is it on ground, and what is it that you're looking forward to, especially from the domestic market in terms of ad spends?
So we are not saying that there was a halt from the customers for wait and watch of GST. It was only for a month of early part of September. Okay. However, with the festive season starting early, say about 20th of September, we started seeing the flow of budgets coming in, and that helped us.
Okay. So you spoke about what the revenue growth would look like, what the margins would be, and how the macros are panning out as far as the global uncertainty is concerned. You are focusing on premium offerings as well. What are the optimum cost per converted user rates? Currently, it is at 58. Will that continue to be the number?
Our aim is to maintain our CPCU rates as well as maintain our margins at the current levels, and improve the overall operational efficiencies using technology and artificial intelligence to give efficiencies on the margin side.
Okay, Mr. Bhutani, when you're talking about the average CPCU rate, it hovered around the 58 rupees mark. Now, going forward, especially given the aggression that you have planned, should that moderate, or do you expect that to increase further?
We don't expect it to go down. We are going to maintain or increase from these levels.
Okay, and the other point is, especially when you're talking about the domestic ad environment, what we want to understand from you is, which is the segment from where you're seeing the maximum amount of growth? Is it the newer age businesses, or is it a comeback of the domestic business, or the earlier or the old age businesses, if you'd call them?
So new age businesses have always been there. Those were the first ones to adopt the digital ad ecosystem. However, in commerce side, we are seeing that the money is flowing from the traditional media to the digital side more frequently now.
Okay.
Okay, all right, Mr. Bhutani, thank you so much for joining in today with your thoughts and the outlook on company's performance going forward. By the way, those flashes at the bottom of your screen where Vodafone Idea has moved the court again. The stock is higher by 1.5%, and this is related to the AGR dues yet again. They are likely to flag inconsistency in recent Supreme Court order on AGR dues. They had indicated that Vodafone Idea or the government should do something which is in the best interest of the consumers and the company as well, and for the sector overall. So they are going to flag SC order stating it had sought relief only against additional AGR dues, that is. So this is something which is, the number is at 9,450 crore rupees. So we'll be watching out for that one. And we'll get in Ashmit as well as to what the details are on this one. The stock has seen has actually fell from the highs. It was up around 4.5% at a point in time.
Key point here is, so there were two AGR dues that's being discussed. The earlier one is a much larger amount.
Around 83,000 crore.
83,000 crore. But the Supreme Court verdict was quite clear that it is only for the additional 9,450 crore. So in case there is a clarity on the earlier and the larger AGR dues, and in case there is any relief, then that will be a material development as far as Vodafone Idea is concerned. We'll get more details from our colleague Ashmit, who's given us this particular development and who's given us this particular story. He's been tracking this for quite some time, but important flashes on the bottom of your screen, both for Vodafone Idea and also subsequently you will see some impact as far as Indestar is concerned. But moving on, here's a quick note for our viewers. As you can see on your screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or a sell recommendation. Any investor, viewer is advised to carry out necessary diligence on their own and through a certified financial advisor for investment decisions. Welcome back to Mid-Cap Radar. Well, for a change, we are not discussing earnings, but we are discussing some important developments as far as the Dredging Corporation of India is concerned. Dredging Corporation of India has gone ahead and issued 2 press releases to the exchanges, which the street clearly likes. So what is it that they said? Number one, the company was an active participant in the India Maritime Week that happened in the week gone by. So now the company has gone ahead and signed memorandum of understandings with 16 organizations, and the company says that the total combined value of all of these MOUs signed is worth over 17,640 crore. Now remember, the company operates under a consortium of 4 major ports in Visakhapatnam, in Paradeep, the JNPA, as well as Deen Dayal Port Authority, and all of them function under the Ministry of Ports, Shipping, as well as Waterways. While that is an update as far as the business front and the opportunity is concerned, the important part is the company saying that they have gone ahead and earmarked 4,000 crore investment dedicated to the modernization of the company, and this particular investment is dedicated for the fleet modernization capacity enhancement to strengthen the dredging infrastructure of the company. So that's a key development, especially as far as dredging is concerned. Stock up 20%.
Exactly, 20% higher locked in upper circuit. We've not seen those levels in a long time on this stock. But before we go to the next big story that we are tracking, let's look at some more stocks which are buzzing on the upside. We have Finiotex Chemicals. Remember, it was higher on Friday as well, up around 15%. Today, it's adding to those gains, 11.5% higher right now. There's BLS E-Services, which is the demerged arm of BLS International. So that stock is up around 15% right now. So just wanted to highlight these 2 names. But Vodafone Idea, of course, that big update that is coming by there. Ashmit Kumar is joining us with all the details. Ashmit?
Well, here's the important takeaway. When the order or formal order of the Apex Court was published with respect to Vodafone Idea's latest demand, at that time, there was a very clear mention by the Apex Court, a clarification given by the Apex Court that while it is leaving the matter open to the government to resolve, in the same breath, in the same order, Supreme Court clarified that Vodafone Idea itself is only asking for relief against additional AGR dues, which add up to about 9,500 crore rupees, which, though significant, pales in comparison to the much larger figure of the AGR demand, which is over 83,000 crore rupees for Vodafone Idea. This had led to an assumption that Supreme Court is clarifying that the government relief shall be limited only and only to additional AGR dues. on that particular issue. We understand that Vodafone Idea is likely to move the apex court once again shortly. Before the Supreme Court, they're likely to clarify that even in their original petition, Vodafone Idea had said not just a relief against additional AGR dues, but they had also asked for recomputation of all the AGR dues. They had asked for both these aspects. They're likely to flag that the Supreme Court order itself, at the very outset, records that these are the two reliefs sought, but then later goes on to say that only relief that the Vodafone Idea has sought is with respect to additional AGR. This confusion is something what Vodafone Idea is looking clarity on. They're likely to flag it once again before the apex court. They're likely to seek a clarification from the apex court. Will the court oblige? Of course, that's the big question. We'll be watching the developments out of the top court closely.
Well, thank you so much, Ashmit, for joining us and giving us all of those details, important developments, especially as far as the fate of Vodafone Idea is concerned. Well, with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.